Third quarter Eurozone GDP data out any second, and it's a contraction of 0.1% in the third quarter. So the Eurozone economy contracts by 0.1% in Q3, meaning the bloc as a whole has slipped back into recession. Of course, 2 consecutive quarters of economic contraction. So how concerned should we be, and what's the outlook for the bloc's powerhouse Germany? I'm joined now by Philippe Brossard at AG2R in Paris and David Cole at Julius Baer in Frankfurt. Philippe, if I could start with you. France was one of the surprisingly strong numbers today. The economy actually grew in Q3. Can this be sustained?
Well, we actually had a good surprise this morning. Well, one explanation is second quarter numbers have been revised a touch down. But overall, the story is that we have been misled by early indicators such as PMI indices, which indicated a contraction in industry and overall in the economy, which was not true. The actual numbers for industrial production was fairly good until September. September was a disaster, but beginning of the quarter was very good, and overall we had growth on the supply side and also on the demand side. We had consumer spending and export doing fairly well, offsetting weakness in investment. So overall, it's a good number, and I suppose people now are going to revise upward a touch their numbers for 2013 growth in France, because the carryover of the third quarter into next year average GDP forecast is quite important.
Okay, so it's fairly positive in France, upward revisions perhaps for next year. David, that's not quite the same in Germany, is it? I mean, okay, the economy grew 0.2% in Q3, but the growth is slowing.
Yeah, indeed. You see indeed, you see some slowing tendency, and probably compared to France, the economies are moving now much more in sync than previously. Germany had been the powerhouse; it's coming down, while France and probably also Italy are doing better than expected, and probably better than feared. And when we look in particularly in the industrial production data, there have been very similar moves, so a very strong showing until August, then this disaster in September, what my colleague just mentioned. So we see here the economy is actually moving much more in sync, and we're seeing also that Germany can actually not go away from the slowdown which we've seen in the Eurozone as a whole.
So David, 0.1% contraction is very slight, but it's still a contraction in Q3 for the Eurozone as a whole. How concerned should we be?
Well, going forward, probably we will see more contraction in the Eurozone as we have still these weak economies, in particular Italy, Spain, but also the smaller ones. They are really a drag on economic growth, and simply we've seen the same tendencies in Germany that they cannot keep up. Actually, they cannot hold growth at a much higher level. Going forward, we expect actually further slowing down in growth. This is then also confirmed by the PMIs, by the Purchasing Managers Indices, which had been released earlier.
And Philippe, same to you really. I mean, are you particularly concerned about the technical recession in the Eurozone?
Well, I think it's kind of a story of the past, even though the fourth quarter is starting off on a weak tone. I think really the low point of the business cycle in the world and in Europe was Q2. So from there, the question is now how quickly can we accelerate? My answer is a bit more than market expect, but it might still not be sufficient. And it puts a lot of pressure now on ECB and on government to do something for growth. ECB is going to be asked to cut rates, I suppose, since their OMT operation is not effective at all. And the government may be asked to delay somehow their budget restriction policy, because it's far too painful for a final demand which is so weak in Europe.
Okay, just want to finish up a question to you both. Reuters published a story yesterday, a review of economic forecasts since the big recession of 2008-09. And this review showed that analysts have consistently been over-optimistic about major Western economies, of course, including European economies, in the last 2 or 3 years. Why are you guys in the market overly optimistic? We'll start with you, Philippe.
I think one thing is the story which has been explained already by IMF is the very tough fiscal contraction we had across the world, in the US to some extent and even more in the Eurozone, has been underestimated on its impact on total GDP. Most of us, we thought that 1% reduction in a deficit would cost 0.5% of GDP. In fact, it cost about 3 times as much, 1.5% of GDP was lost for each percent of cut in the deficit. Another story is that the oil prices have been very erratic, and we had quite a severe oil shock in 2011, which was unforeseen the previous year, and the impact of that extended into the beginning of 2012. I think that's the main reason why we miss, or collectively I miss, the actual state economy.
Okay, David, do you share that view, or do you think you guys, analysts and economists, are just optimistic by nature?
Well, there had been indeed some negative surprises going into this recovery, and also some drags. Well, the fiscal side, or what we have to say for our house, we had been also consistently below the consensus expectations. But you are right, we have not been pessimistic enough also in this respect. The thing is really that probably what has been underestimated is, one, the fiscal drag. Yeah, it's there. It's probably larger, in particular as it's front-loaded in the Eurozone. But also the whole deleveraging process and the resulting credit crunch, at least in some economies of the Eurozone, is difficult. Is indeed difficult to estimate, as it does not happen in every economic cycle. It has not happened for a long time in the past cycles. So here, some uncertainty regarding the economic impact is still there.
Okay, gentlemen, thank you very much. My thanks there to Philippe Brossard from AG2R in Paris and David Cole from Julius Baer in Frankfurt. That's all from us for now. I'm Jamie McGeever. This is Reuters.